we're starting to see, it seems like prices are going down, in the real estate market. At least I'm seeing, if I go on Zillow in LA, because I'm just curious about the market, you'll see homes that were up there for a few months and now they're cutting prices. Yeah. You see homes that have been there for 3, 6, 7 months now that aren't moving. So they're dropping the price because they don't want to keep paying the mortgage on something that they're not going to live in it. And we're starting to see it happen a little bit. So if history is rhyming, and the stock market's been kind of crashing, it seems like for the last 6 to something months now. Is this now, okay, we're seeing this a little bit and it's going to keep going as we go into the next year? Or what could history teach us about potentially what could happen now?
So you want to keep your eye on the Federal Reserve Bank, and you want to keep your eye on the economy.
If inflation keeps going up.
If inflation keeps going up, or rather if the Federal Reserve Bank keeps raising interest rates, that is the better indicator that you want to keep your eye on. Because if they keep raising interest rates, that means mortgage rates are going to keep going up, which will make housing more expensive. So I'll give you a quick example. If in the end of 2021, you wanted to buy a $500,000 home, you could put down 20%, which is $100,000, meaning you would borrow $400,000. Now you can borrow that $400,000 at 2.8% for a 30-year fixed rate mortgage in 2021. And so your monthly payments would be like $1,650 a month for that $500,000 home. If now today you wanted to buy the exact same home with no modifications, no upgrade, it's not going to cost you $500,000. It's going to cost you about 20% more, which is about $600,000. So now if you put down the same 20%, you're not putting down $100,000, you're putting down $120,000, which means you're no longer financing $400,000, you're financing $480,000. Now back then, you were able to finance the $400,000 at 2.8%. Today, you're going to finance that $480,000 close to 6% on a fixed rate 30-year mortgage. So you're borrowing more dollars at a higher interest rate. Back then, it cost you $1,650 a month. Today, it's going to cost you about $2,850 a month to borrow that $480,000 for the exact same home. So you went from paying $1,650 a month to $2,850 a month, which is about a 70% increase in monthly costs on the exact same home, assuming no modifications, no upgrades. That's kind of unsustainable unless, there's more money coming into the markets, unless you keep having, a way for people to keep affording that. And this is driving the issue now is how much higher can it go? Because if you keep raising interest rates, what's going to happen? Your cost to buy the home are going to keep going up. So unless you have a 70% raise in your monthly salary, it's going to be much harder for you to afford that higher cost to buy that home. So that's the situation that we're in right now. And like you were saying, it's driving this kind of shift in the housing market where you have a lot of people who want to buy homes saying, I can't really afford the same home anymore. I don't want to live smaller, so I'll just keep the same house that I'm in right now. I'll keep renting. I won't sell. I won't move because I don't want to pay this higher price. And this is where, the question is, again, what's going to happen next? If we keep raising interest rates and the monthly cost keeps going up, well, it's going to become more expensive. And the $2,850 that I mentioned, it also does not factor in the higher property taxes you have to pay and the higher insurance.
Jeez.
Because your property taxes are based on the value of your home. So when you're buying a $600,000 home versus a $500,000
Paying
home,
more yearly property tax, you
have higher property taxes. You're insuring a more expensive property. So your costs to own this home are significant. Almost double what they were a year ago, month to month. And that's where it becomes, it's not rocket science to see why less people can buy homes today than they could a year ago, just because the cost to buy a home has gone up so much.
So who is it the right time to buy a home for?
Well,
is it the right time for anyone?
Yes. Look, okay, if you want, now, we got to understand now, are you buying the home as an investment or are you buying the home to live in? Because those are two different things.
Right.
And a lot of people get this confused, and I'm going to explain why. I really want to get into that because that's one of the biggest misconceptions in America, I would say. When you buy a home for yourself to live in, we're told it's the biggest investment of your life, so go big.
It's not a good investment for a lot of people.
It is not. You should buy a home because you want to create memories there.
Lifestyle, environment.
Exactly. And because you can afford it. You should not be trying to time the market with the home that you want to create memories in.
Right.
The biggest thing is going to be, can you afford the home and do you want to live there? Now, to answer that question of can you afford it, there's three different things you want to ask yourself. Can you afford the down payment? Can you afford the monthly payment? And can you afford the move-in costs? Because that gets overlooked a lot. Because now when you want to move into this home,
Furniture, moving, all this stuff.
exactly. First you have the closing costs, and then it's the cost of furniture, the cost to move in, and then when you want to move in, you got to upgrade, right? Because now you want to have a nicer kitchen, you want to finish the basement, you want to have the new appliances, and furniture is not cheap. And so you want to make sure you factor that in before you can move. Now, if you can afford the down payment, you can afford the monthly payment, and you can afford the move-in costs, and you find a home that fits your needs, go out, buy it, get a 30-year fixed rate mortgage. Don't worry about it because now you can afford it. If interest rates go down, just refinance. Get the lower monthly payments. Don't stress about it.
Right, because you can refinance in a couple of years.
If interest rates go down, you can always refinance because, if you're trying to time the interest rate market, you never know what's going to happen. Just refinance if they go down. So that's the main thing you need to know, that if you want to buy a home, don't try to time the market. If you can afford it, hey, go out and buy it. Everyone's saying, well, what if home prices crash, then I can buy then? Sure. But what if they don't? What if they go up by 20%?
Waiting and timing, yeah.
So, it's the same thing, right? When you talk about investing your money in any asset, stocks, the best advice is time in the market beats timing the market. This is what every fundamental investor says. So now if you're trying to buy a home, why are you trying to time the market? It's not even an investment. Are you gonna, wait to buy your shirt until you see cotton prices come down? You're not looking at that. If you like the shirt that you buy and you can afford it, go out and buy it. Now,
what's your thoughts on, Grant Cardone always has this famous line. He says, live where you rent and rent what you own.
It's a great line. It's a great pitch. If you want to own a home, there's nothing wrong with that. Just understand that it's not an investment. For a lot of people, the freedom of owning a home and paying off your mortgage is all that you want. You just want to have that stress-free life. And this is where it comes down to your lifestyle, right? Do you want to live big? Do you want to live large? Do you want to have all the luxuries and the nice stuff and you want to go for it all and you're willing to take that risk? Then yeah, don't put all that cash down into a down payment and tie yourself down into the home. Rent, take the down payment, invest it in your business, invest it somewhere else, that way it can grow bigger. But if your lifestyle goal is, hey, you know what?
I want a great space. I want to have family. I want to have memories.
I don't care about all that fancy stuff. Then go out and buy a home. There's nothing wrong with that. And this is where you just have to understand. Like, I'll give you a personal example. We have an office for minority mindset companies, market briefs and all that. I rent it. We could easily buy the office.
You don't own the office space.
I don't own the office space. I'm paying $4,400 a month plus utilities and all that.
Michigan's cheap, man.
It's cheap.
You get that cheap rent in Michigan.
It's still a lot of money. So we're paying what, 50 grand or so a year in rent.
Sure.
And I could go out and buy the property.
Yeah.
But why don't I? Well, if I wanted to, it's probably, I don't know, let's just say it's $1 million building. If I wanted to buy the building, I got to take $200,000 from the business and go out and buy the property. Then I can own the building and then see some return. The average real estate return, somewhere between 7 to 10% a year. Okay. If I took that $200,000 and reinvested it back into market briefs, my financial newsletter,
could grow.
I'm trying to get a better return than 10% a year. And so for me, in the business sense, that's why I'm renting, because I know that I can get a better return by investing that money back into the business to grow the business. And this is where you just have to understand the goals in your lifestyle and make sure your actions are aligning with your goals and your lifestyle goals. Because if you say, hey, I want to live large, I want to have the nice things, I want to have a big investment portfolio, but at the same time, you have Gucci, Louis Vuitton, you have a Beamer, but you have no investments, your priority is in the wrong place. Sell the Louis Vuitton, sell the Gucci, sell the Beamer, go on and start investing your money, start building your investment portfolio if you really want to be wealthy. So you can't speak out of both sides of your mouth. You got to figure out what you want and just make sure your lifestyle aligns with that, because a lot of people try to push this is the right way to do something. But that's not the case. I mean, if we just take a step away from finance for a second and look at, for example, health. Many people say, this is the diet you need to have.
Right.
These are the exercises you need to do. Well, there's so many different things you can do. And at the end of the day, it's eat healthy and exercise, right? And now you can dig down deep and find what's right for you. But at the core, it's eat healthy and exercise. In finance, it's very similar. You can say, invest all your money into real estate. Don't own your home. Invest it all into real estate. Buy as many rental properties as possible. Some people would say, buy it in stocks, do this, or build a business. At the end of the day, it comes down to live below your means, invest the difference.
Right.
Eat healthy and exercise, live below your means, invest the difference. That is at the core. And then you can get down to the nitty gritty. That's what I talk about, right? Because I'm interested in that. And that's where I try to learn more. But I also don't try to say that this is the only thing that you can do, because your goals are different than mine. Your background is different than mine. Your risk tolerance is different than mine. And so you're going to want to make different investment
Yes.
decisions than me, which is why I don't try to say, this is what you need to do. I'll say, hey, this is what I do. This is how I invest in real estate. This is how I invest in my business. This is how I invest in stocks. But what you do is going to now depend on what is interesting to you, which is why the financial education is so important, because I don't want to lead a herd of sheep, right? I want you to be educated. That way you can make smarter
Make your own
investment
decisions.
for yourself, but make an educated decision. Because the issue that so many people have is we assume that the reason why we're not successful is because we don't have the right tool set, when in reality for most people is we don't have the right mindset. It's not a tool set issue, it's a mindset issue that so many people have, where if you have the right mindset, you'll realize that the tool set is right in front of you.
Yeah.
And you just got to be able to harness the power of that. When they were printing trillions of dollars through things like the PPP lending program, through the stimulus program, the concern was not inflation, it was actually deflation. Because in 2020, when the economy shut down, the concern was the prices of things are going to drop. We don't want that to happen.
Because no one's spending enough, is that why? Or
No one was spending.